students, welcome to Accounting 1303, Introduction to Accounting 1. My name is Mrs. Mercado and I am going to briefly be going over some of the key elements in Chapter 7, which deals with accounting for cash. And we are using textbook College Accounting 23rd edition. Okay, so this particular chapter is a complete 360 degrees what we've been covering thus far. The first 6 chapters that we've covered previously have to deal with the accounting cycle. We're putting that in the past now. Now the next couple of chapters are going to be dealing with cash. Cash is a super important asset for all businesses. And now we're going to be learning how to, save, keep our cash, how to account for our cash, just the basics of cash. And that is what I'm going to be highlighting in this little presentation today. Now, make sure that before you work on your assignments that you do read the entire Chapter 7. I am not covering the entire Chapter 7 in this presentation. I'm just highlighting key information that you need to know for your upcoming exam. Okay? Now, this particular chapter describes the process of opening up an account, a checking account, more specifically for a business. But either it be a business account or a personal account, the process is very similar. So I'm hoping that all of you that are working or that have been out there do have an existing checking account, and you do know the process of going to the bank, filling out a signature card, making the deposit to open the account, everything that needs to be done to open an account. Okay. I also hope that you all know the responsibilities of having a checking account. Make sure you don't overdraft your checking account. Okay, because if you all know, if you overdraft your checking account, you will be charged fees. Okay, so it's very important to keep track of your bank balance. And nowadays, I understand people just look at their phones and they can see they can log into their bank website and they can see their bank information. Okay, that information is live, meaning whatever happens, is posted to your transaction. But a lot of businesses have extra transactions that occur that we usually don't encounter as individuals. And this includes, even though, we are, in an era of technology, I'm still kind of old school, but there's a lot of businesses that still use checks to pay for stuff, okay? They write a check, they mail it out, and it takes a while for those checks to clear, okay? That's something that's not very common nowadays with us individuals. Nowadays, we either make ATM withdrawals or we pay with a debit card. Okay, it's rare that we have any checks issued out. Okay, unless you are completely old school and you like to pay your bills with checks. But now there's so much technology that you can set up your bills to be paid online. There's no need for checks in an individual setting, but businesses still rely heavily on checks. Okay. So it's important that you read the chapter, we become familiar with all of this information. The key concept that I am going to be covering in this particular chapter is how to prepare a bank reconciliation. Okay? Anywhere you work, whatever you do, cash is important. We need to know how much cash we have. And sometimes, we keep our records at the individual business level, and when we pull up our account history or account balance, my books don't balance to what the bank is saying. There's a difference between the bank balance and the book balance. And there's various components that cause this difference. And that is what we're going to be covering today. How to complete the reconciliation, identify what is causing those differences, and then if necessary, make any journal entries. Okay? So that is the foundation of this short orientation for today. Okay? Make sure that you do read though. Okay? So, whenever we are balancing our cash account, it is very important that we identify reasons why my balance that I have at the organizational level does not balance to what the bank is saying that I have in the bank. This is very important because if you're planning a major purchase, you're making a payment, or whatever the case might be, you need to know exactly how much actual money do you have in your bank. Is it what the bank is telling me that I have, or is it what I have in my books that is correct? Okay, so we need to figure out the discrepancies between the bank and the books and figure out, ideally, how much money do I have to spend? Okay, so So it is very important that we learn how to identify what is causing those differences. Okay. In order to be able to complete a reconciliation, you do need a copy of your bank statement. Now, most banks mail out a bank statement on a monthly basis, depending on what bank you work for. But nowadays, you can pull up your bank statement online 24/7. If you don't get it through the mail, you can just go online, create a username and password for your business or individual level, and be able to access your account online 24/7. So that just makes it so much more convenient to be able to balance. Okay. Now, depending on the business that you work for, I used to work in the banking industry. I was involved in banking for over 13, 14 years. I used to work in the accounting department for a $2.3 billion bank. And we had, the bank had, that I was working for, had about, I would say, 12 checking accounts with other banks. And this included banks in Mexico and banks here in the United States. Okay, so cash is very important. Depending on the accounts, there were some accounts that we used heavily. There were other accounts that we did not use as much. Depending on the account is how frequently we reconciled it. We had an account with the Federal Reserve that was heavily used. That account was balanced every single day. The first thing we would go in there and do is balance our Federal Reserve Bank account. Okay. There were some other accounts that we had with some Mexican banks that we used for currency exchange purposes. They did have transactions, but they were not as large or as significant. So we would hold off on balancing those accounts on a monthly basis. Okay. So every organization has its own policies or procedures as to how frequently you're going to be balancing your accounts. Okay. But the process is the same whether you're balancing 1 or 10 accounts. It's just a repeat. It's just different data or different information that we're using. Now, the particular textbook covers in great depth what causes the differences between the bank and the book. Okay? And this is just an extract coming from your textbook directly. Okay? So, when we examine the records between the bank and what we have recorded in our books, there might be a difference, okay? And that is where we have to complete the reconciliation process to be able to balance both. Come up to an agreement to say, okay, this is how much money we actually have. There's some common differences or some common reasons why we have these differences, okay? And in the textbook, they do an excellent job in illustrating what causes the difference between the balance in our bank and the balance in our book. One of the main reasons are deposits in transit, okay? These are deposits that have not reached or been recorded by the bank before the statement is prepared. Now, I used to work for a bank, and they had a cutoff time, okay, of 3 p.m. So what does that mean, a cutoff time? So what that means is that any deposits received after 3 p.m. were not going to be posted till the following business day. Now, a business day is Monday through Friday. So that means if you made a deposit on a Friday afternoon at 4 o'clock, that deposit was not going to be made available till Monday. Okay? And now it gets even more confusing because depending on the bank that you work for or that you bank with, it's the items that get cleared or not. Okay? So some banks, if you make a cash deposit, even though it's made after the cutoff period, it gets memo posted into your account. Other banks don't have those procedures in place. So it just depends the bank that you have chosen or selected. And when you are selecting this bank for your business, make sure that you do identify with the bank and ask, what are your cutoff periods? What becomes available immediately if I make a deposit after the cutoff period? Those are the kinds of questions. So the deposits in transits are basically you made a deposit. It was not done within the established time frame. So it's going to take a business day for it to post. If you do it on a Friday, then it's going to take Saturday and Sunday because that's the weekend. We don't post on the weekend. Banks don't post on the weekend. It won't be available till Monday. If Monday is a holiday, a bank holiday, then it won't post till Tuesday. So there is a good probability probability that you are going to have deposits in transit, okay? So these are deposits that you have physically taken to the bank. You've been to a teller. They've given you a receipt. You went back to your office and you recorded the deposit. But guess what? The bank has not recorded it because it's still in transit, okay? It's not going to post till the next available business day. So you're showing it in your books as a deposit, but the bank is still not showing it because of their time frames or their time limits as to when they post their deposits, okay? We also have outstanding checks. These are checks that have not been presented to the bank for clearing. So let's say, for example, you have to pay your electric company. You mail them a check, okay? You mail them the check today, okay? So in your books for the company, you're going to write check number 123 for my electric company, $300, okay? So at that point in time, you are recording the check in your book, okay? So you're saying, okay, I wrote check 123 for $300 to the electric company. You're making that deduction in your checkbook or your bank or your company's books, okay? Now, you still need to go to the mail this check out. It needs to travel to wherever the check is going, get there. Whoever is processing the checks processes them, and the bank receives them in their end and clears them. So it can take a couple of days, okay? So, outstanding checks are checks that you've issued out, but they have not cleared the bank. We are waiting on those checks to clear the bank, okay? We have service charges. These are bank charges for services such as check printing and processing. A lot of banks also charge a fee to have your account open with them. There's various fees that get charged. I know I get charged for having a debit card. I get charged $1 a month. So, those are other fees that could be assessed. So there's just general service charges that the bank charges. So when the bank charges your business for X reason, whatever it is that they're charging you for, what they do is they just take the money out of your bank account. They have access to that. So let's say, for example, if they're taking, they charge $10 a month to have your account open, they'll just withdraw those $10 from your account. If they charge you $2 to have a debit card, then they'll just withdraw the money. So what happens is they take the money out, but you haven't been made aware, so you haven't recorded that into your books. So you have to wait until you receive your bank statement to say, oh, the bank took money out on these days and these days for service charges. I need to put that into my books, okay? We also have collections of promissory notes or charge accounts made by the bank on behalf of the depositor. Sometimes the bank collects money either for loans or any other reason on your behalf from customers, and they deposit the money in your account. The same thing. They've collected for you. You have not been made aware, so you haven't recorded that into your books. We have not sufficient fund checks. These are checks deposited by the depositor that are not paid because the drawer did not have sufficient money. Okay, give me a second. Let me grab something real quick. I'm back. Sorry, I had someone in my door and I didn't want to stop the presentation. Okay, so I was on not sufficient fund checks. Okay, so let's say, for example, you are a business and you sell bicycles. Okay, so you sell a bicycle, someone pays you with a check. Okay, what you do is you get this check, you take it to the bank and you deposit it, right? Okay. So you deposit the check, everything's good. So you record a deposit in your books, right? I went to the bank and I made a deposit on this date for $200. Okay. The bank gets the check and processes it. Okay. And what that means is they send it to the originating bank to make sure that, the check has funds, right? Well, it turns out that this check does not have any money, or the person that paid you the bicycle with the check doesn't have any funds in their account to cover the check. So the bank where you make the deposit gets notified, you know what, there's no funds in the account for this check, okay? We're not giving you the money. So what the bank does, what your bank does, they go ahead and they reverse out, or they put you an Nsf information on your account that says, you know what, check 999 that you deposited on this day came back Nsf. So we're gonna go ahead and we're gonna deduct this check from your account because you didn't have any funds. Okay. So along with that, banks charge a fee. And now this textbook doesn't go into that high level of detail, but in the real world, this is how it happens. On top of reversing the transaction, the deposit that had been made, they charge you a fee for the work of having to process this check and the check not clearing. So you'll get charged an Nsf fee. Okay. And then there's errors, general errors, either made by the bank or the depositor in recording cash transactions. Okay. Banks do make mistakes. Okay. I worked for banks and for a lot of years, and I've seen where they transpose numbers, they post to the wrong accounts by error. Just remember, a lot of these transactions that are being done nowadays are being done by computers. So they scan your check, or they scan your deposit slip. If the numbers are not very clear, the computer's going to pick up a different number. Okay, so errors can happen. Okay, if it's an error that is made by the bank, then you do need to contact the bank and they need to make the correction. If it's an error that you made at the book level, so for example, let's say that you wrote a check number 555, you wrote a check 555 to pay your telephone company, okay, $100. Okay? Well, when you wrote out that check, it was $100, but when you recorded it in your books, you by error recorded it for $10. Okay? When that check clears the bank, it cleared for $100, and then you're like, well, what happened here? The check in my book says it's $10. It cleared the bank for $100. You have to go back and do some research and say, oh, you know what? I made a mistake. The $100 is correct. When I recorded that check in my books, I did it for $10 instead of $100. I need to make a correction on that. Okay? So these are some of the most common reasons why there are discrepancies between the bank balance and the book balance. Okay? So the bank balance is what the bank takes care of. This is what they show that you have in their bank. The book balance is the record at the organizational level. Okay? This is what you think you should have in your bank account based on all of the transactions that you have recorded. Okay? Now there's a difference, obviously, because of all of the items that have been listed here. Okay? Now, there are several steps that need to be completed when preparing the bank reconciliation. Okay? So, when you're preparing a bank reconciliation, there's 3 general steps. Step number 1, identify any deposits in transit. Remember, these are the deposits that have not cleared the bank. And any related errors related to deposits in transit. Step 2, identify any outstanding checks and any related errors. So any checks that have not cleared the bank need to be identified. And then step number 3, identify any additional reconciling items. The majority of the time, step 1 and step 2 will handle most of your differences, but in some instances, you will have additional reconciling items. Okay? Now, when you're looking at your deposits in transit and related errors, this is what you're going to have to do. You're going to have to compare the deposits listed in your bank statement with the deposits in transit on the last month's bank reconciliation. Okay? So you're going to always, as a starting point, look at your last recon. Okay? On the last recon, I had 2 deposits in transit. Okay? Okay? Those 2 deposits in transit by now should have already cleared. Okay? So you should be seeing those 2 deposits in this month's bank statement. Okay? And then if you have any new deposits in transit this month, well, then you include it. Deposits in transit should not be flowing month over month. Okay? If you have them 1 month, by the following month, these deposits in transit should have posted and they should be cleared. Okay? You're going to compare the remaining deposits in the bank statement with the deposits listed in the accounting records. Okay? These are for the deposits done in the current period. Okay? So any deposits in the accounting records but not in the bank statement are considered your deposit in transit for the current period. Okay? So step number 1, you're going to clear your deposits in transit that you had outstanding from last period. Step number 2, you're going to identify any deposits in transit from this period. Okay? And then step number 3, you're going to compare the individual deposit amounts on the bank statement and in the accounting records to make sure that they match in amounts. Okay? There might be some discrepancies. Either the bank made a mistake or the employee made a mistake at the company level when they recorded these deposits, and adjustments need to be made. Okay? And we're going to be able to do an example of this. That way you can be able to get a hold of what I'm speaking about. Okay? Also, we're going to review the outstanding checks and related errors. Now, these are the two most common categories of differences here. Okay? So you're going to compare any canceled checks with the bank statement and the accounting records. Okay? If the amounts differ, we need to identify which one is correct. Is the books okay, correct, or is the bank correct? And then make any correcting entries. As each canceled check is compared with the accounting record, place a check mark or highlight or whatever you want. That way you know what, this check clears over here with the bank record. Cross them out, do whatever you need to do. Here they say put a check mark. I'm not a check mark person. I like to highlight. So what you're going to have is you're going to have your books and you're going to have the bank statement. And you're going to say, okay, this check cleared the bank over here, and I highlight maybe with different color coding, whatever works for you. Okay. Step 3, any checks that have been written at the book level or at the company level that have not cleared the bank must be included as outstanding checks. This includes outstanding checks from last month's reconciliation that have not cleared. Now, it's very important here. Checks usually take about 7 to 10 days to clear. Okay? So, if it's been more than 7 to 10 days and the check has not cleared the bank, what I would do is I would follow up and research. Okay? Why has this check not been cleared, through the bank? Maybe it got lost, maybe it got misplaced. What happened? Okay? So some people have a general rule where they say, you know what, yeah, it should take 7 to 10 days. I'm going to give it 30 days just to be on the safe side. If it isn't clear with 30 days, then, I'm going to put a stop payment on that check and reissue a new one. Okay? It just depends what your organization does as common procedures. Okay? But you do need to monitor that those checks clear. If I go and I see a reconciliation that has a check, an outstanding check that has been there sitting in your reconciliation for 6 months, we've got an issue. Okay? Those checks should not be sitting in there longer than 30 days. Okay? They should be cleared. You should be reviewing your reconciliation and make sure that those checks do get cleared. So that is just some of the items that will help you and facilitate you in preparing a bank reconciliation. Okay? In your exam, you will have to complete a bank reconciliation. That is why I'm going to demonstrate how to do one today. Okay? So the example that I'm going to be going over is, before I go over the example, this is an example provided in the textbook of what a reconciliation looks like. The top portion is the bank information. Okay? You're going to start off with your bank statement balance. You're going to add any deposits in transit. You're going to deduct any outstanding checks or any other miscellaneous items, and then you're going to get your adjusted bank balance. Okay? The bottom portion is your book balance. This is what you, the company, shows that you should have. So you start off with your book balance, and then you add any items that you've identified between the book and the bank. You make any deductions for any items that are pending, and then you obtain your adjusted book balance. When you balance the adjusted bank balance and the adjusted book balance need to equal. Okay? That is the whole point. Figuring out how much money do I have. Well, in this particular example, according to the bank, I have 1,748.09. According to your books, you have 2,393.23. Okay. If I needed to make a business decision, neither of those two numbers are correct. I have to reconcile. And the actual amount that I have available to spend is actually $2,092.33. Okay. That is my reconciled account balance. Okay. Adjusting entries need to be made for any items under the book section. So if you have any additions or deductions in the book section, you have to record a journal entry. Okay? Only for the book section. If there is an error at the bank level, you do not have access to making corrections there. You have to contact the bank so they can make the correction for you. Okay? So corrections are only made, or adjusting entries are only made for any differences or reconciling items in the book section. Okay? Okay, so now we are going to jump to the example. Okay? You're going to prepare a bank reconciliation and the journal entries for our reconciling items. Okay? So this is problem 7-8 from the end of your chapter. So it says, the book balance in the checking account for Johnson Enterprises as of October the 31st is $5,718. That is your book balance. The bank statement shows an ending balance of $5,217. So the book has a balance of $5,718. The bank shows a balance of $5,217. So we need to figure out what is causing the difference between the two. The following information is discovered by comparing last month's deposits in transit and outstanding checks with this month's bank statement, comparing deposits and checks written per books and per bank in the current month, and noting service charges and other debit and credit memos shown on the bank statement. Okay? And then they give you that you have 2 deposits in transit, you have 4 outstanding checks, you have an unrecorded ATM withdrawal, you have a bank service charge, you have an Nsf check, and you have an error on a check. You are required to prepare a bank reconciliation as of October the 31st and prepare the required journal entries. Now, what I've done is, that way I don't have to be going back and forth, what I've done is I've printed this out, that way I can have it. This is in your end of your chapter. Okay, you can print out problem 7-8, that way you can follow along. Or you can just do a print screen of this, that way you can have the information available. Okay, so make sure you do know you need this information to be able to complete your reconciliation. So this is the setup or the structure of how your reconciliation should look. The top section is your bank information. The bottom section is your book information. Okay, so you have the name of the business, which is Johnson Enterprises. We are preparing a bank reconciliation as of October the 31st. Now, I like to start with the easy information, which is my bank and my book balance. So, if I go back, you can see here, it says that the bank statement shows a balance of $5,217. That is your bank statement balance, $5,217. So I'm going to go over here where it says bank statement balance, and I'm going to enter $5,217. Okay. Now I like these numbers to have commas because it just makes it easier for me. Okay. So that is my bank statement balance. Now what is my book balance? Well, I'm going to go back to the problem, and it says here that the book balance as of October the 31st is $5,718. Okay. So I'm going to enter that over here, $5,718. Okay. Now I can go back and I can start entering my transactions. Now this particular problem is very easy because they've identified for you all of the information. In the real world, it's not that easy. You have to figure it out. Okay? You have to figure out if you have any deposits in transit, if you have any outstanding checks. You have to put your work into it so you can be able to figure this out. Now this problem, they've laid it out easy for you. They're telling you that you have 2 deposits in transit. And if you see, these are deposits that were made at the end of the month, which means that they were probably made a late Friday afternoon, and then they haven't been able to clear because of the cutoff point. So these deposits are going to be posted the next available business day. Okay, so I have 2 deposits in transit, one on October the 29th, one on October 30th. Okay, so I am looking here right now. Okay, those are my 2 deposits in transit that I'm going to be focused on. So I'm going to transfer that information over to my bank statement. So what I'm doing is I'm adding those 2 deposits to my bank statement, because eventually those deposits will post to my checking account at the bank level. So I have 2 deposits in transit, one from October the 28th, the October the 29th, and one from October the 30th. Okay, and they are $210 and $406. Okay. If there's any addition that needs to happen, you put them in the first column. Okay. If it's just the balance, then you put it in the second column. But because I do have 2 deposits in transit, I'm going to add those 2 together. And I'm going to put a total. Okay. So I'm going to underline here. Okay. And the total, I'm going to add my $210 plus my $406. That's going to give me $616 in deposits in transit. These are deposits that have not been posted to the bank account yet. Okay. Now, we are going to deduct any outstanding checks. Okay. These are the checks that the business has written out and mailed out, but those checks have not cleared the bank yet. Okay. Now these are my outstanding checks. Okay. Okay, right here. So these are the outstanding checks that I'm going to be posting. Okay. Now let me put these in green. That way we can see the difference. Okay. Now, these are the outstanding checks. These are the checks that I've written, mailed out, but the bank has not cleared them, meaning whoever I mailed them to haven't processed those checks yet. Okay? So I have 4 outstanding checks. It's very important that you provide the check numbers. That way you know which checks, you can be able to identify them. So I'm going to put those under my outstanding checks. I'm going to deduct these, because what happens when a check clears the bank? Your balance decreases. Okay, so you add the deposits, because when you make a deposit your balance goes up. You deduct the outstanding checks, because when the check clears your balance decreases. Okay, so I'm going to put here my check number. I have check number 1635. I have check number 1639. I have check number 1641. I have check number 1653. Okay, because I have multiple checks right here, I'm going to add those in my first column, I'm sorry. So, the first check is for $56.40. Okay. The second check is for $175. The third check is for $135.50. Let me just sort them like that, $135.50. And the fourth check is for $443.10. Okay. So I'm going to add these together. Okay. To get a total for my outstanding checks. I have a total of $810 in outstanding checks. So those are the checks that are waiting to clear the bank. So that's the second item. And if you see here, if I were a student, what I would be doing is highlighting, okay, because or marking them off. So I know that I've already used up everything in the red box. I've used everything in the green box. Now I'm going to go to the next item that I have. This is an unrecorded ATM withdrawal. So we need to figure out where we're going to put this. And it's for $200. Okay? So now we are focused on this transaction right here. Okay? So we went to the ATM and we made a withdrawal. Okay? But guess what? When we came back into our office, we forgot to record that ATM withdrawal in our books. Okay? So you withdrew the money from the bank. The bank automatically deducted the money, the $200 from your bank account because you made a withdrawal. But when you came back to your office, you forgot to enter that withdrawal in the books. Okay? So now we need to do that. Okay? So this is going to be an adjustment in our books. Why? Because we failed to record this ATM withdrawal when it happened. The bank is showing it, but we, the organization, is not. Okay? So I need to go in there and I'm going to make a $200 adjustment. Now, this is an ATM withdrawal. Are we going to add or are we going to deduct? Well, you withdrew money from the bank. That means your cash is being decreased. So we are going to go ahead and we're going to deduct. Okay? So I am going to deduct the first item, and I'm going to put here unrecorded ATM. Oh, I can't spell. ATM withdrawal. Okay? So I have $200. And I'm doing this entry in my book balance because I had forgotten it to record it in my book. So I need to go in there and I'm going to need to record it. The next item we have is a bank service charge. Remember I said that the bank has access to your money and that they charge fees for multiple reasons? Well, they charged you $37 for, I don't know what, for some kind of a fee, okay? For some kind of a service charge, okay? So, $37. So, on your bank statement, that $37 is already reflecting. Bank service charge, $37. But you hadn't been notified about this, so until you get your bank statement and you see it, you're like, oh, the bank charged me $37 for the service charge. I need to record this in my books, okay? So because the bank took away $37 out of your checking account, that means that that's a decrease or a deduction to your book balance. So under my book balance, I'm under deductions, I'm going to have the bank service charge of $37. The next one we have is an Nsf check. Okay? So someone paid you with a check, you took it to the bank, you deposited it, but guess what? When that check tried clearing the bank, that check came back Nsf. Whoever gave you the check didn't have money in their bank to cover that check that they had given you. So now, I need to record that Nsf check in my books. Okay? I've just been notified by the bank. You deposited a check that was Nsf. We're going to have to adjust your balance. Okay? Now, the bank has adjusted their balance, but you have not. So you need to go in there and make that adjustment. Okay? Because the check came back Nsf, this is a deduction. You don't have $476 to spend like you thought. I had recorded a deposit for $476. Now I need to reverse it. Okay? So, I'm going to have here an Nsf check. Nsf of $476. Okay? Now it says here, error on check number 1624. The checkbook shows it was for $75, but it was actually written for $57. Accounts payable was debited. Okay? So you were paying some kind of a bill here. You wrote down in your checkbook that this check was for $75. But when the check actually cleared the bank, you could see it that we had written it for $57. Okay? So, we need to figure out which one should be the correct amount. Should it be $75? Should it be $57? So an adjustment can be made. Okay? So error on check number 1624. The checkbook shows it's for $75. but it was actually written for $57. Okay, so the adjustment needs to be made. Where are we? Okay, so it's so we have a difference. So let's see how much the difference is. So we have $75, and that's how much we wrote in our checkbook for. But the check was actually only written for $57. So there's an $18 difference. Okay, so we're gonna have to go with what actually cleared the bank. We wrote a check for $57, yet in our checkbook it shows that we recorded it for $75. So I need to go in there and I need to add $18 into my checkbook balance because I had withdrawn $75 when I should have only withdrawn $57 from my checkbook balance on my book side. So there is a difference of $18. Okay, so that difference is going to go under my additions, and I'm going to put here, this is error on check number 1624. Okay, because this is the last item I have, I'm going to go ahead and I'm going to put it here. There's no addition that needs to happen, so I'm just going to go ahead and I'm going to put it there. Okay, so now if you see, we have now used all of the information that they have provided. It is very important that you keep track of your information. Okay, that way you can be sure that you've used up all of the information and that you didn't miss anything. Okay, okay, so we've used everything up. Now let's balance it. Okay, now let's see if what we did was correct. Okay, so what I do here is I have the 5217 and the 616, which is my outstanding deposits in transit. I'm gonna get a subtotal here. So that's gonna be 5217, and I'm gonna add my $616. That gives me $58.33 after this point. Okay. Now I have $810 in outstanding checks. So what I'm going to do is I'm going to get my $58.33, and I'm going to subtract these outstanding checks because these are deductions. Okay, so I'm going to subtract them, and this is going to be, oh, I put them in the wrong column. It should be down here. So my balance is $5,023. Okay. My adjusted bank balance is $5,023. So that's your beginning balance plus your deposits in transit minus your outstanding checks will give you the $5,023. Now at the book level, I have my balance, my beginning balance of $57.18, and I have that adjustment for that error on check number 1624. Okay. Now I have 3 deductions. I'm going to add those up, and I'm going to put them here, my total. So I have 3 deductions that equals $713. So to get my adjusted book balance, I'm going to get the $57.36 minus my deductions of $713, and that's going to give me $50.23. So if you see, those two numbers equal. So if I need to make some kind of a business decision, I know that the money that I have available to spend is $5,023. Okay, my book and my bank are now in balance. That is the whole process of completing a reconciliation. You are balancing your books to the books of the bank and making sure that we identify how much money do we really have. That is why we have to take into account the deposits in transit, the pending outstanding checks, and any other miscellaneous items that have been posted. Okay, so this is what a reconciliation looks like. Okay, those two must always equal. Okay, the adjusted bank balance needs to equal to your adjusted book balance. If it does not, you did some kind of mistake. You need to go back and figure out what the error is and fix it. Okay, now like I said before, any items that are under your book section have to have an adjusting entry. Okay? So, I'm going to highlight here, maybe with a different color, maybe with this one. Okay? That error needs to be reported, the unrecorded ATM withdrawal, the bank service charge, and the Nsf fee. Those 4 items under your book balance section need to have a journal entry. Okay? So, let's start off with the error on check number 1624 for $18. Okay? Now, it said here, your checkbook shows it was for $75, but it was actually written for $57. Accounts payable was debited. Okay? So what are we going to do here is, when we recorded this transaction in our books, we recorded it for $75. We should have recorded it for $57. So we withdrew $75 instead of $57. So now we need to put back into my book balance the difference of $18. Okay? So my cash is going to increase, and all of these adjustments are done as of end of month. And because we are doing October, these entries are going to be as of October the 31st. Okay? So your cash is going to increase by the $18. Okay? And we had overstated our accounts payable, so I'm going to go ahead and I'm going to credit my accounts payable, because that is what the problem stated. Accounts payable was originally debited. So now, when I did this transaction, I debited my accounts payable for $75. Now I need to go in there and I need to make an adjustment for the difference of $18. Okay? And then I can just put a short description. Error on check number 1624. Okay? So that takes care of that $810, I'm sorry, that $18 adjustment right there. Okay? So that is done. Okay? Now let's move on to this $200 adjustment. Unrecorded ATM withdrawal. So we forgot to record the ATM withdrawal. Okay? Now what does it say? Unrecorded ATM withdrawal. It has a little asterisk. Let me see if I still have the textbook open. Let's see. Oh, right here. It says here, the funds were withdrawn by Enoch Johnson for personal use. Okay? So what this is telling you is that one of the business owners, Enoch Johnson, decided to take money out of the business for personal use. Okay? So that's why they did that ATM withdrawal. Okay? So that money that was withdrawn for the ATM had nothing to do with the business. It was for the personal use of the business owner. Okay? So I need to record that transaction now that I know what it is. That's why it's important to have your ebook open all the time. So once again, this is as of October the 31st. Okay? And Enoch Johnson is making a withdrawal. So we're going to go ahead and we're going to debit the drawing account for the $200. And your cash decreased. How do you decrease cash? By crediting it, the $200. And here I'm going to put unrecorded ATM withdrawal. Okay. So that is the second adjustment right here. Okay. Now the third adjustment is a bank service charge. The bank is charging you $37 for some kind of a fee. Okay. Now, depending on your business, is what account you're going to use. If the amounts are not very significant, you might want to put it under miscellaneous expense, which is what we're going to be doing here. Let me see. Let me go back to my Excel spreadsheet. Okay. So it says here, Nsf Check, bank service charge $37. So you have either two options. For this textbook, they are using miscellaneous expense, but most businesses use an account called bank service expense, bank service charge expense, or whatever the case may be. That way they can know how much money they're spending in their bank, okay? But for purposes of this problem, that way when you're doing your homework, you're consistent, we should be using miscellaneous expense, okay? And this is a bank fee of $37. How do we pay for that bank fee? We pay with that bank fee with cash. Okay? So remember, when cash increases, you debit. When cash decreases, you credit. Okay? So I'm going to put here bank service charge. Okay, so that handles that $37 right there. And now you have an Nsf check. So that was a check that was given to you by your customer. You deposited, and it came back that that customer didn't have any money in their bank account. So now we need to reverse the original entry. So what happens here is when this person paid you the money, you cleared their receivable. So they owed you $476. You recorded an entry saying, well, they made me a payment. They no longer owe me money. Okay? But now that the check has come back NSF, do these people actually owe you money? Well, yeah, they owe you money because that check that they gave you was no good. So you still need to go back and collect those $476 because that was a back check. So you're going to call, hey, Pedro, you gave me a check. It bounced. It was no good. You need to bring me in cash next time, okay? Make sure you pay me because your account is past due and I need this money as soon as possible, okay? And I don't want to run the risk of you giving me another check that is no good. So bring me cash, or you can tell them whatever you want. But that's what I would do. If it already happened once where this customer the check bounced, I don't want it to happen again. So how do you prevent that? Either you pay me with a credit card where I can get immediate funds, or you bring me cash. Okay, cash is always welcome. Okay. So now I need to record an entry to put into my books that Pedro owes me $476. Okay, because the check that Pedro gave me was a bad check. Okay, so I'm going to go ahead and I'm going to record my entry here. It's of October 31st. Okay, I'm going to set up a receivable. That way, I put it back into my books that someone owes me money. Pedro owes me money. Okay, and I go ahead and I'm going to withdraw or deduct from my cash account because I had originally posted a deposit. So now I'm going to reverse that deposit. Okay, because I have an Nsf check. So I have at this point recorded all of the adjustments that need to be recorded under the book balance. Everything has been posted. Okay, all of my journal entries. These are the 4 journal entries that I need to record based on my reconciliation. Okay, so this is how you complete a recon. Okay. You start off with your balances, whether it be the bank balance or the book balance. For the bank statement, you're always going to have 2 main categories. If you have any deposits in transit, you add them. If you have any outstanding checks, you deduct them. Okay? If there's any other adjustments that you have to do, you can insert them in either section or put another section below it. And then you get your adjusted bank balance. On the book balance, you have your beginning balance. And then you have any adjustments that need to be made. In this case, we had an error where we had recorded in our books the wrong amount. We made an adjustment. We had failed to record an ATM withdrawal by the business owner. We have to record that. The bank charged us $37 for a bank service fee. That needs to be recorded. And the customer gave us a bad check. They came back NSF. I need to record that back check in my books. Okay? At the end of the day, your adjusted bank balance will equal your adjusted book balance. Okay? This is a very hands-on chapter. Make sure that the textbook provides great illustrations. Make sure that you review your illustrations, that you read the chapter carefully. These are not very long chapters. It shouldn't take you maybe 30 minutes, 45 minutes to read the chapter at the most. So make time, read the chapter before you attempt your assignment. Okay? So that is a brief overview of Chapter 7, in specific, Chapter 7, preparing a bank reconciliation. Okay? If you have any questions when you're completing your assignments, please do not hesitate to either contact me during my scheduled office hours or send me a Blackboard message or email, and I will get back with you as soon as possible. Okay? That is it for today. Till next time.